So, good morning. We finished the last in first a question. So we can now have, do we write advantages and disadvantages? So you are to start on the weighted average. Yeah, so let us now go to the last method, which was meant to be the weighted average. We go to the last method, which is meant to be the weighted average. So for the weighted average, we can write something brief on it by summarizing that this method gives consideration. This method gives consideration to the total quality of the materials in the store. Quantity, not quality. This method gives consideration to the total quantity of the materials in the store. Total quantity of the materials in the store. By calculating the average price. By calculating the average price. By calculating the average price. Then we continue by writing that the weighted average price. The weighted average price is computed by dividing. The weighted average price is computed by dividing the total cost of materials. By dividing the total cost of materials, the total cost of materials in the store. Total cost of the materials in the store by the number of the units in the store. By the number of the units in the store. By the number of the units in the store. Then we continue by writing that this method is much better than LIFO and FIFO method. This method is much better than LIFO and FIFO method. Is much better than LIFO and FIFO method because it uses the average price. Because it uses the average price. It uses the average price when issuing out the materials. It uses the average price when issuing out the materials. It uses the average price when issuing out the materials. When issuing out the materials. So that is now the explanation we can give in relation to the weighted average method. So we can now do a question on that. Let us get a question from your past papers in relation to that method. We can now come up with what should be. We can now come up with. So the question I want us to do is August 2022. August 2022. There is a question number 1, part B. August 2022. There is a question number 1, part B. There is a question number 1, part B. So when you can go through that question, August 2022, question number 1, part B, it reads that the following information relates to the store's receipts and the issue of material R, in a small manufacturing enterprise for the month of April 2022. So April 2022 up to 30th is given. Note number 1, opening inventory is 4,000 units at shillings 100 per unit. Note number 4, issued 3,000 units. Note number 5, purchased 9,000 units at 120, issued 3,200. Note number, date 12, return to the store 2,000 units from the issue of April 2022. Then date 15th, purchased 4,800 units at 130 per unit. Then 18, return to the supplier 400 units out of the quantity received on 5th of April 2022. Then not 25th, purchased 2,000 units at 140 each. Then issued 4,200 units. Then purchased 2,400 at 115. Also issued 5,600 units. So it is the company's policy to use weighted average method when valuing materials issued. So required the store's ledger card or account for the month of April 2022. So we now prepare the store's ledger card. We now prepare the store's ledger card. The store's ledger card. The weighted average method. Using the weighted average method. Using the weighted. So now we prepare the store's ledger card when we use the weighted average method. Weighted average method. So we should be having the date, then purchases, the sales, then the balance, sales, and then the balance. So we have the units, the cost per unit, and also the value. The units, the cost per unit, and also the value. So we normally start with the opening balance. We normally start off with the opening balance. We normally start off with the opening balance. Start off with the opening balance. So when it comes to the opening, balance, now to the opening balance. So opening balance. So it is there in the note number 1. So on 1st of April. So you check the note. Check off the note number 1. So in that note number 1, the balance, the opening inventory is 4,000 units. There are 4,000 units valued at 100 per unit. Valued at 1 per unit. So 4,000 multiplied by 100 should give us. So this one, it's 40 or 400,000. So 400,000. So that is now the opening balance. That is now next equal. That's now should be the opening balance. That now should be able to be the opening balance. So after the opening balance, we go to the next date of the transaction. The next date of the transaction should be when? So on 4th, they were able to issue. So on 4th, able to issue. So they are issuing how many units? So 3,000. So we normally issue them at the average price. We sell them at the average price. When you want to get the average price, we normally take the value divided by the units. But for this first one, we still remain at 100. Yeah, so we issue material at the average price. So at 100, like that. So 3,000 multiplied by 100. So that should be the same as what here? 300,000. But now the balance from the 4,000 we minus 3,000 to give us 1,000. Then when you minus 300,000 from the 400,000, the value, because you have issued this, but the value of that, so it will remain 100,000. So average price, you take this, divided by that. But it will still remain at 100. But it's not always the same. When we continue, it will be different. When we proceed, it will be. So that is now what we are now as up to that particular. That is now what we should be able to have up to that date. The next one should be on 5th. So on 5th, you can see what happened on 5th. On 5th, what happened was purchases. And they were able to purchase how many units? You are meant to purchase 9,000 at what price per unit? At 120. So when you take 9,000 multiplied by 120. So when it comes to the balances, we now add. We don't separate them. We add. So in the previous balance, the units are 1,000, but we have purchased 9,000. So it will be having a total of. Yeah, so you add this balance you have plus the one that you have purchased. So it will give you 10,000. It will give you 10,000. Then also you add 100,000 plus 1,080,000. So that one should be 1 million and what? 180, isn't it? Yeah, so 1,180,000. So get the average price. To get the average price, you take this figure, divide by that. To get the average price, we take this amount, divide by the units. So it will be 180. So that is how to get the average price. That's now how you will be coming up with the average price. So after that, we go to the next date of the transaction. When is the next date of the transaction? So what happened on date 9th? So they were able to issue how many units? 3,200. At 118, we issued them at the average price that you had calculated in the previous period. You see the 118? Yeah, so what value are we going to have at that point? 377,600. Yes. So when it comes to the balance, you net, you subtract. So when you take 10,000 minus 3,200, you have 10,000, subtract what you have issued. It will be 6,800. Also subtract this figure from that to get the balance. Now net this value from that to get the balance, so to get the average price. $802. Yeah, so get the average price by taking this divided by 800. Sorry? 180. It is still remain 180. Exactly 180. Yes. Yeah. So sometimes it's changed. But remember, it's the average price that you calculate. So after that, we go to the next date of the transaction. The next date is when? The next one is next 12. So 12, they are saying that returned to the store 2,000 units from the issue of 4th. Now, is it to the issue on 4th? They were returned. So they are saying that returned to the store units from the issue of 4th April. So when they are being returned, there are how many units that were returned? So they had been issued on 4th. The price on 4th, it was 100. So that we get which value? We get 200. So when it comes to the balances, you add 6,800 plus 2,000. 8,800. Then also 802,400 plus 200,000. This 1 million and what? So get the average price. Get the average price. Get the average price. Sorry? 113.9. Yeah, no problem. You just round it off like that. So we go to the next date of the transaction. We go to the next date of the transaction. So our next date of the transaction is supposed to be when? So we go to date 15. So date 15, they purchased 4,800. 4,800 at 1,000. 4,800 at 1,000. 600. 624,000. So in the balances, remember to add what we have purchased. So 8,800 plus 4,800. 13,600. For the value, we do the same. 1,02,400 plus 624,000. $16,26,400. So that's the average price. Sorry? 119.6. We go to the next date of the transaction. So the next date of the transaction is supposed to be when? On that 18th. So you can see on that 18th, they have said that returned to the supplier. We returned to the supplier. So when we return to the supplier, remember the other one, it was returned to the store. But hapa tunarudishia supplier. So it will be reducing the balance. You record them in the column of the cells. Yeah, we have it, so we are returning to the person who gave us. So we record them in the cells because we gave back to the owner who gave us. So there were how many units that were returned to the supplier? Yeah, so when we are returning them, we use this average price. Use that average price, which you have calculated average, because it is coming from this 13,600. So what figure do we get from there? $47,840.
So it's not there.
Anything that is going out is at the average price. The method is the weighted average. Yeah. So anything that is coming to reduce the balance, you reduce it using the average price. When you use the weighted average method, any item in the sales column, whether the shortage or the return to the supplier, you value them at the average price. Value anything in this column under the sales, value them at the average price, because we don't have first in, first out, so they are all combined here. So if they are combined there, you still use the average price. So which is supposed to give you, when you subtract 400 from this, you are left with 13 much. Then here subtract from here to get the average, the balance. Then get the average price. It may remain the same or it may change. It may remain the same or it may change. It is still 119.6. So we go to the next date of the transaction. The next date of the transaction is on. So we go to date 25th. So date 25th, what happened? They purchased 2,000 units at 140. So when you take 2,000 multiplied by 140, it will give us which figure? 280,000. So when it comes to the balances, you add 13,200 plus 2,000. It will be 15. Then you also add 280,000 plus 1578,560. 1580. Sorry, 1580.
18.
It is 18.
58.
Then now get the average price. 122.3. Yeah, so that is now as per that stage. So we go to the next date of the transaction, which is supposed to be when? So what happened on 28? So they were able to issue 4,200 at 150. $630,000. So balances 15,200 minus 4,200. You multiply by your 122.3 over the 630. So it should be how much? The average price. Sorry? Inakuja 513 660. So what should be the balance? Toa hii kwa hii itakuja ngapi units? This one is 11,000. How about the value? Sorry? 13, 44. So get the average price for that. Get the average. So what should be the average price? Still 122.3. So that is now as per that stage. So we go to the next date, which is supposed to be on 29th. So on the 29th, they purchased 2,400 at 150. At 150, 2,400 at 150. So that should give us which way? 360. So when it comes to the balance, it will give us which value? $13,400. 17. And 27.2. So finally, we go to the last date, which is supposed to be on 30th. So on 30th, they issued 5,600. So you issue them at 127. Seven. So now get the balance. Get the balance.
It's just a summary of the 5 levels. So, right? And their hearts are put on the starting process. Should be the weighted average. Weighted average rates. Weighted. So when you come across a person then before you
So what is the closing balance? In how many minutes? Sorry?
7,000 each month.
The mean gap
992 by 20.
on average price is up
127.3.
127. Yeah, so that should be now the value for the closing balance. So if they ask you to give them the value for the closing stock, here you go. So that now concludes that element of the stock. So I start a new topic, labor costing. So we start a new topic as labor costing. So online, I've sent some notes on labor. So we start a new topic. Online, confirm whether you can see the notes on the labor costing. So we have finished material. We now go to the labor costing. So online, are you able to see the notes on the labor cost? Someone to confirm whether you can see the notes in the class group. I've just shared them in a few minutes ago. So check whether you can see the notes. So let us go through that handout. So the next topic is labor costing. Remember, you are dealing with the material. Now we go to labor. So we now go to labor costing. We now go to the labor costing. So when it comes to labor costing, when you check through the notes about labor cost refer to all costs incurred in compensating the human resource employed to provide a useful service in the production process. This compensation usually comes in the form of basic salary, overtime pay, bonus, and also allowances. Bonus and also the allowances. So therefore, total gross earnings is computed as follows. When you want to get the total gross earnings, you simply get the basic pay, you add the bonus due, you also add the overtime premium, also plus what? The allowance. So labor cost can be classified into a direct or indirect cost, being fixed or variable costs, C, controllable and non-controllable costs. Controllable and non-controllable costs. So direct labor cost may be defined. I've given the definition for that. I've also given the definition for the indirect labor cost. So the fixed cost, variable labor cost, controllable labor cost, and also uncontrollable labor costs. So those terms, you go through them. You go through them. you will get the meaning of labor costs. So I've given you features of a satisfactory labor remuneration system. I've given the features of a satisfactory labor remuneration system. Number one is that the system should be able to produce the best quality and quantity of work. The system should be able to produce the best quality and quantity of work. Number two, it should be satisfactory from the point of view of both employer and employee, and therefore reward should be related to the efforts. Then, note number three, the scheme should be clearly defined so that workers are able to understand what they are being paid. Also, it should guarantee a minimum living wage to each worker, irrespective of his efficiency. Then also, no maximum limit should be set for the amount to be paid. Number six, matters beyond the control of the worker should not affect the earnings of the workers. Number seven, it should reduce the labor turnover and labor absenteeism. Then number eight, the system should be flexible so that changes may be introduced if necessary. Then the system should be capable of operation without excessive clerical work. Then also, if possible, the system adopted should be one which is in use in that particular industry or locality. So that is now what we can have as the features of a satisfactory labor remuneration system. I've given you methods of labor remuneration. I've given you methods of the labor remuneration. Number one is the time rate system. So for the time rate system, it is saying that under this system, workers are paid for the time spent and no consideration is given to the volume of production. Workers may be paid on an hourly, daily, weekly, or monthly basis. Then the earnings are calculated as follows. So to get the total earnings, it will be hours worked multiplied by the rate per hour. So this system is suitable under the following conditions. You are able to give you the circumstances, and also there is advantages and disadvantages. I've also given you number two as the piece rate system. So under this system, workers are paid a fixed rate per annum per unit manufactured, irrespective of the time taken. So you can see the features. I've also given you advantages and also disadvantages. Then I also gave you incentive schemes on the next page. There is also group bonus scheme. Then when you continue on page 4, I've talked about labor turnover. I've talked about the labor turnover. Then kuna causes of the labor turnover. Then pia nimeokupea cost of the labor turnover. So I want you to read that handout. You can read the theory part. So what I want us now to do is to go to computation. So for the theory part, you read that handout. They normally examine the theory part. So you read. So the first question I want us to do is in the sitting of August 2022. Question number 1, part C. So August 2022, there is a question number 1, part C. There is a question number 1, part C. So August 2022, we go through the question number 1, part C. So we go through that question number 1, part C. So that question 1, part C, they gave you information that Workers Limited manufactures men's suits for the local market. So jobs are allocated to the 2 operators, Jogu and Mabili, with bonus paid for the hours served. In the month of July 2022, Jogo made 100 units, while Mabili made 105 units, for which the time allowed of the 60 standard minutes and the 15 standard minutes per unit respectively was credited. So additional information, note number 1, the basic wage rate is 360. The basic wage rate is 360 per hour for both employees. Note number 2, for every hour served, a bonus was paid at a rate of 25% of the basic wage rate. Note number 3, hours worked in excess. Hours worked in excess were paid at the basic wage rate plus 2/3. Note number 4, Jogu completed his job in 88 hours, while Mabili completed his job in 78 hours. So basic working week has 80 hours. So required for each operator, determine Roman letter 1, amount of the bonus payable. Number 2, total gross wage payable. Roman letter 3, the wages cost per unit. So bonus is normally based on the hours served. Let us see how to compute that bonus. Let us now check how we shall be able to compute the bonus. We want now to come up with how to calculate the bonus. So to get the bonus, so I want us now to compute the bonus. So it will be based on the hours served. So there were 2 workers there. So there was Jogo and Mabili. There is Jogo and Mabili. So we start off with the time allowed. We start by calculating the time allowed. So to get the time allowed, you can see Mabili, the job was supposed to make how many units? In the second paragraph, Joho is making how many units? 100. And each unit requires how many standard minutes? It is 60. So divide again by 60 to convert them into hours. There are minutes, so divide by 60 to convert them into hours. Yes, just a minute. because the 60 and 60 cancel. Then Mabili was supposed to make how many units? 105. But each unit required how many standard minutes? So multiply by 50, also divide by 6 to get the standards. Seven. 87. That's now the time allowed. The next one is the time taken. The next one is meant to be so time taken confirmed. Joko completed his work after how long? In the note number 4. So he finished after 8 hours. Mabili finished after how long? After 78 hours. So get the difference, you get the time saved. To get the time saved. Give us the time saved. So how many hours were saved? Do you understand nothing? Now you're so go back to the question. You are given information in the note number 2. You are given information in the note number 2. For every hour served, a bonus was paid at a rate of what percent? 25% of the basic wage rate. So now we can get the bonus. So this one will be 12 hours that were saved, but the bonus is paid at 25% of the basic wage rate. Basic wage rate, go to the note number 1. What are you given as the basic wage rate per hour? In the note number 1. So get 25% of 360 multiplied by 12. That will give you the bonus for job. For Mabili, it is 9.5. Also get 25% of 360. So get now the bonus on that level. So that's how to get the bonus. So bonus is computed on the hours served. To get the hours served, you take the time allowed, subtract the time taken. You'll get the hours that were served. So that was Roman letter 1. We now go to the Roman letter 2. We go to the Roman. So Roman letter 2 is the total gross wage payable. 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 So to get the gross wages payable, the gross wage payable, want to come up with the gross wage payable. The gross wage payable. So to get the gross wage payable, it is supposed to be given by the basic pay. Take the basic pay. The basic pay. We add the bonus due. Then we add the overtime premium. Add the overtime. So when you want to compute the gross wages, you simply take the basic pay, you add the bonus due, you also add the overtime premium. You also add the overtime premium. So we start with the basic pay. We start off with basic pay. Start off with the basic pay. So basic pay, so to get the basic pay, so basic week, it has got how many hours? So when you go through the question in the note number 5, the basic working week has got 80 hours. So you take 80 hours multiplied by 360. So that one should give you 28,000. So it is the same for my bill because they work the same hours. So you also take 80 multiplied by 360. That is now the basic pay. That will be the basic pay. The next one is the bonus due. The next one should be bonus due. So bonus due. Bonus due. What we calculated. How much was the bonus for Joe? How about my baby? 855. So that is now the bonus due. That will now be the bonus due. So after the bonus, the next item should now be the overtime. The next item should be overtime premium. So to compute the overtime premium, you want to get the excess hours that they worked. You want to get the excess hours that they worked. So to come up with the excess hours, you start with the time taken. We start off the time taken. So we start with the time. So time taken for each one of them in the note number 4. This one is 88. Then we begin at 78. Then we minus the basic hours. We minus the basic hours. Less from that. The basic hours. So basic hours, you remember in the note number 5, there is 80 and also 80. So we get now the overtime hours. We now get the overtime hours. So 88 minus 80 will give us. So huyu mwingine hana overtime. Instead, I work less than the required. Yeah. So you see, he worked for 78, but the week you should work for 80. So this one has no overtime. I work less than the basic week. Then I want you now to check.